Hello, I'm Dr. Cheryl Dunn, and I'm here to demonstrate an introductory financial accounting problem in which we are accounting for bad debts using the percentage of receivables method. And the problem we're working on here is for a company called Girl Doll Corporation. So take a look at the problem. Okay, calculating bad debt expense for the year for a company that uses the percentage of receivables method is a two-step process. Basically, first we have to so first we have to determine the desired ending balance for the allowance account. The percentage of receivables method is a method that's focused on the balance sheet. So we're trying to make the net realizable value, or the net receivables balance, equal the amount that we actually expect to be able to collect. So the first thing we have to do is figure out how much we think we're not going to collect, which is what we want to be our ending balance for the allowance account. The second thing we do then is to calculate the bad debt expense as the amount needed to bring the allowance account to the desired ending balance. In other words, we take a look at what the beginning balance is, and then we figure out what journal entry we need to make it be the ending balance that we want it to be. So first of all, we're going to look at what we think the uncollectible amount is. And in this company, we're told that it's 5% of the accounts receivable that will become uncollectible. And we're given the unadjusted ending balance in accounts receivable. So currently, we're doing part one here, accounts receivable is currently $640,000. And we're told that 5% of that, or 0.05, is expected to be uncollectible. And if we multiply 640,000 by 0.05, that gives us $32,000. So we want the allowance account to end up being $32,000 on the credit side. If we set ourselves up in a little allowance account in T account form, we want it to end up with a balance on the credit side because it's a contra asset, goes against accounts receivable. We want it to end up with $32,000. We're told that the allowance currently has a $2,500 credit balance. That's the unadjusted ending balance in that account before we make any adjusting entry for bad debt expense. And that means that we want our bad debt expense entry to credit the allowance for $29,500, because to get from a $2,500 credit balance to a $32,000 credit balance, we need an additional $29,500. And so that means our bad debt expense is $29,500. And if we were putting it into a journal entry, we would debit the bad debt expense for $29,500 and we would credit the allowance for doubtful accounts for $29,500. And that, by making this entry, that's where that gets into the account, giving us the desired ending balance that we think is uncollectible. Thank you for viewing this demonstration, and I hope you found it helpful.